welcome to Aviz Podcast series. My name is Ilona Gabinsky, and today I am very excited to welcome Louis Toth. Louis is a managing partner of Alta Ventures, where he focuses on investing in AI, cybersecurity, edge computing, and networking. Louis is also our valued board member and investor here at Aviz, and that's why I'm especially grateful to welcome you today to our podcast series, and thank you very much for joining.
Good to be here.
So at Alta Ventures, your tagline is AI meets the edge. Can you tell us a little bit about what does it mean?
Sure, actually. So some of this stems from my background, co-founding and then starting Comcast Ventures and then running that. But essentially the edge is an interesting exchange point for traditionally where applications, data was pushed to the farthest point so that you would improve user experience. We're now in a world where a lot of data is being collected at the edge through sensors, through cameras, financial transactions on your mobile device or whatever. And so a lot of that data heretofore has been pushed blindly into the cloud. And I think that, and my partners, and I think that we're really seeing a remaking of the edge to actually capture this data, process it, organize it, store it, secure it, transport it. And so we see the edge as being this fertile source of investment opportunities for us as that entire tech stack is being remade. And so we look at everything from semiconductors, hardware platforms, operating systems, enterprise applications, cybersecurity, DevOps, AI, ML sort of sprinkled throughout. So that's really why we sort of focus on that area, and we think it's a really nice lens to look at a lot of the spaces in infrastructure that others are looking at too.
Yeah, definitely. So AI needs the edge, right? It's interesting that you right now mention it, and we are just coming out of GTC, NVIDIA GTC. The like AI and energy has been all basically in the air. So, and AI is a major shift that's happening right now across any organization, any company, any industry. And what do you see from your perspective? What do you think about AI? Where is it going?
Yeah, so look, I mean, AI is a secular trend, just as cloud was a secular trend. We believe that that'll continue. We're just in the early innings of the advent of AI, and yes, there's a lot of froth and a lot of noise about it, but real products are being sold. There are real use cases. We're still testing out business models. We're still trying to figure out the value add. We're still trying to figure out what cost benefit we'll see coming out of the application of AI. But it's real. Tens of billions of dollars of chips being sold every quarter, and not just by NVIDIA, but by others as well. And then there's this entire other ecosystem in order to build these AI factories, in order to improve models, and then sort of make all this relevant for not just for consumers, but for enterprises as well. So it's a vast ecosystem, obviously, that's being created, as part of this. And we certainly think that Aviz is in a great spot to take advantage of that. And it's one of the reasons why we invested.
Yeah. So building on that, and we being in the networking space, why do you think right now that you mentioned Aviz is in a great spot right now as AI scales? Why do you think, as we position ourselves as open and AI-ready networking company, why do you think that that's important for a company like Aviz specifically?
A few different things. So as we see AI being implemented, certainly in the cloud, in these new AI factories, ultimately in enterprises, maybe even on devices, there is a lot of new infrastructure that needs to be built out. Mm-hmm. And I think Aviz is certainly well primed, as are others, but Aviz is particularly well primed to take advantage of that build out. And so people typically think of AI factories, they think of NVIDIA GPUs, as they should. But there are lots of other parts that come, along with that. Everything from the basic real estate and building materials to build these AI factories, to all the optical connectors, to the switches, to the servers, all the software that's necessary to then power and make these AI factories run these LLMs and other AI models that are critical. So Aviz plays in a bunch of different parts of that value chain. Certainly, being full stack in terms of its networking capabilities, I think it has an ability to be part of the blueprint of these AI factories. And some of the relationships that we have going on with NVIDIA and other GPU vendors, I think are a testament to that. But even before that, I think that Aviz has an ability to, through its open approach to the ecosystem, to begin to bring down the cost of a lot of these proprietary, switches and other network elements in order to make these AI factories more cost effective. When we look at the price tags of these new projects, they're eye-watering, right? And you sort of then have to begin to look through and see, okay, so where can you actually begin to pull out costs? Where can you remove these proprietary barriers and have an ecosystem of vendors that work with each other, that can innovate, that can make, that lowers the cost structure, that can make these viable? And so that's where Aviz comes in. And, we started off at Aviz in Sonic, open source project and networking, but obviously we've broadened beyond that. And I think that's a key part of the theme.
Yeah, I 100% agree with you, Louis. We started as a Sonic and with Sonic, and we are now a Sonic leader in this space. And of course, now we are broadening the story and prioritizing AI factories and our deep network observability solution, which is our data layer solution, and as well as our AI network copilot. And that what makes us different, what you said, is this ability that we are open, we can work with any vendor, and we have a large partner ecosystem as well that we work together with. But I have a question for you. What you've seen so far, what gives you confidence that Aviz has really the right momentum and execution, that Aviz will be able to execute properly in this space? As you know, we are a Series A startup, and we are growing, and we see a very good growth and a lot of demand. But from your perspective, what gives you that confidence?
Sure. A few different things. We can look at it from, the angle of, commercial success or the team. But let me start off in terms of the industry structure. So, we often look at companies and we try to understand, how do they insert themselves into a changing landscape? That's often difficult for a startup. You've got these large incumbents that are, that have, natural market power to be able to effectuate change. Aviz is unusual in that it's been able to create these ecosystems at several different layers. If you sort of take more fundamentally at the semiconductor layer, right? Our partnerships with the likes of, NVIDIA and Marvell and Broadcom and so forth. And then at the hardware layer. So we're open, we work with a bunch of different partners there. Some of them are investors as well, whether it's a Cisco or a Celestica or a Wistron, and others that are not necessarily investors and are not necessarily announced. And then we, beyond that, even higher level, we have an ecosystem of players that we work with as part of the AI Factory Blueprint. And for those, I think they are all working together, trying to make, as I was talking about before, trying to make this a cost-effective solution for whether they're, a sovereign AI cloud or, hyperscaler trying to get into this business. So I think that is really unusual for a startup to be able to do that. And I sort of credit the founders, Vishal and Chid, for being able to, to pull that off. That is not easy. Specifically to your question in terms of the areas where I've seen some great progress. One is certainly on the commercial side. And we started off with Sonic. It was sort of the initial landing point. Sonic had been around for a while, right? A lot of people were saying, oh, isn't this Sonic thing, isn't this sort of come and gone? But what was fascinating was beginning to see Sonic moving out of the hyperscalers into the enterprise. And Fortune 2000, Fortune 100, Fortune 10 players beginning to adopt Sonic. The word's gotten out. Once one or two of these big players have done it, others have seen that it's possible, and they can do it with the resources that they have and with the partners that we have. So I think that is a major check for the company, and that then means that we can pull in. Aviz can then pull in its other products and demonstrate the full tech stack capabilities, whether it's DNO or ultimately it's deep network observability, or it's network copilot products and other things. The other thing is the team. I think the team has been, in addition to Vishal and Chid, I think you've done a great job in pulling in a lot of folks that have been sitting on the sideline, learning about things like Sonic, and then sort of broadening their understanding of Aviz. And now with the new sales organization, that's been great. The ecosystem that you guys have built, ecosystem of partners, little Aviz on its own isn't going to be able to sell everything. So having partnerships and being able to sell through channels, I think is this early on is pretty unique for a startup. And that I think has been a major bonus, a major sort of wind in the sails of the company. And then obviously, the engineering team has executed really well. And finally, I think it is also worth noting that a company at the Series A stage normally does not have 4 or 5 products. That was unusual. And I remember when I first spoke to Vishal about it, he was describing all these products. I was wondering, how do they hang together? And now that we have sort of, call it 3 major product groupings, but it's slightly more than that, we've figured out the connective tissue, and we're beginning to figure out the cross-selling motion between product categories. That's also really important, and not a common thing to see at a Series A company. So kudos to the team for being able to pull that off.
Yeah, this is great. I mean, thank you very much, Louis, for mentioning this, especially me being part of Aviz also. Really appreciate your comments. So it's not easy to build a company. And I just have a question for you. So in general, when you're looking at companies that you want to invest in, and you have a very broad portfolio of companies, so how do you decide? What makes you really decide which to invest in beyond just maybe technology or beyond financial statements? Is there anything else is it a gut feeling you follow, or your intuition?
Yeah.
And it's always a risk.
There's always a risk. I've been doing this for over 30 years, so experience certainly helps. There are a few things that we look at, and we are an early stage investor. So we do seed, Series A, the occasional pre-seed even. But so we usually back technical founders, although more and more we'd like to see the go-to-market motion earlier. But, there are a few critical things. We look at, does the team have a unique insight into a certain market, a certain disconnect happening, a certain event or trend that allows a startup to slip in? And remember, startups are effective because they can move quickly, they can develop something and then occupy a space. If it takes too long to develop, then I think the incumbents move. So one is knowledge and insight. The second one is technology mode. So we really look for sustainable technology differentiation. It's tough for us to back the umpteenth company in a category that may be hot. So not to be critical of people that were investing in scooters, the umpteenth scooter, like that's not us. We only do B2B, but we really look at how many other teams on the planet can actually develop this? And if the answer is much more than 10, we're not going to take on that project. We really look for tech differentiation. The third thing is, can they run a startup? Which is a lot harder, as you said, it's a lot harder than it looks. And so, we really look at the combination of those three things. We only look at that intersection between AI and the edge. So we're very heavily weighted towards infrastructure, in the broadest of terms. So that then kind of sets us into very specific categories, and those are the sorts of things that we look at. But it's really around the team in many dimensions and their capabilities and so forth. One thing that is worth noting today versus if you asked me this question 3 years ago, I would have said, hey, we'll just back technical founders and figure out the go-to-market later. The market is moving way too quickly. We want to see, as I said earlier, we want to see go-to-market happening and figured out sooner rather than later, because if you don't know that now, you may not make money. You may get the wrong pricing model, the wrong business model, and then the world's pass you by.
Why do you think the market is moving much faster now? Is it mainly because of AI?
It is because of AI. I mean, I think we all sort of look at and are marveling at the rapid capabilities of AI. We were looking at, we were talking to some startups last year that were saying, well, AI can't really, these LLMs, they really can't understand 3D space, right? They can't understand the relationship between, this object and that object in 3D space. Well, guess what? The last set of releases of all these models, they can understand that. Not perfect, but they understand that. So AI, all these models are beginning to crunch through capabilities that heretofore we've said, not possible. So that makes it very tough for an entrepreneur when you think, what's really sustainable at the end of the day? What is, an Anthropic or an OpenAI not going to be able to develop in the next 18 months? And so some of the entrepreneurs that I talked to last year, when they're pitching their story to me, I talked to them this year and they're like, yeah, what we pitched, it doesn't really hold water anymore. We have to come up with a whole new story. Even though they raised their funds, they have to come up with a whole new story because that old story is not going to get them to their next round of funding. It's moving really fast.
So for a startup right now, in addition to what you mentioned with regards to technology, the team, and being able to understand the market and really do early go-to-market. So this speed that the startup can move with to be able to really reevaluate or being able to reevaluate the market, penetrate that market, it needs to be much faster. So those startups will win that can actually sustain that speed.
Yes, but there are different types of investing. I was talking to an angel investor earlier today, and he doesn't have to figure out all that. He just needs to get talent in the door, develop something that's differentiated enough for 12 to 18 months, and then either through an acqui-hire or, he can then move on. For someone that's got an institutional fund at the early stages, you need to figure out what's the world going to look like in 3, 5, 7 years. Remember, the average holding time for an institutional investment is 5, 7 years, right? So I have to worry about what the world looks like then. Trying to pivot, having a team that can pivot is great. Having a team that's nimble and flexible, it's terrific. But I'd rather not do that if I didn't have to. But a lot of this stuff hinges on, hinges ultimately on business models. Like, how can you figure out how to ultimately extract value on a sustainable basis? Like, what's something that, especially if we go into a more recessionary environment this year where budgets get even tighter, like, how do I ensure that this is something that someone will continue to pay and the CFO doesn't, in Q3, Q4, 2026, take a red pen to that line item and say, can I save this for 1 or 2 quarters and do that project in 2027 or 2028? So I think that's the thing, what's the must-have? And part of that also then is, okay, there's a bit of a prisoner's dilemma, right? So if you as an enterprise don't do this and your customer and your competitors do, like, are you really screwed? So like try and find those kinds of things. And AI is lending itself very nicely to that, right? So whether it's initial use cases are around workflow improvements, operating expense reduction, those sorts of cost savings. But ultimately, it's how do I enhance my revenue? How do I have a better sense of what my customers want, or how do I use AI to better detect an upsell possibility to a customer where my competitor doesn't have that technology or doesn't have the right data set to be able to determine that, right? And then come up with the appropriate pricing model that will, keep the customer in. So those are the things where AI starts getting really interesting.
That's amazing. So you mentioned you have more than 30 years experience.
I know.
Investing in the early stage startups.
Makes me feel old.
No, you look amazing. So, Louis, how many, from your experience, what is this rate? What is this percentage? How many startups out of 10, let's say, how many make it?
I mean, the sort of the rule of thumb is if you have 10 startups, one does super well. You got another 2 to 3 that do generally fine, and the rest are probably middling to poor. Okay, so let's just call half of them. I would say are at or below average, right? The other half, are above average, but maybe one of them is a really breakout if you're lucky.
So 1 out of 10.
Yeah, you can sort of look at it that way, but I mean, it's obviously going to be a curated portfolio. I mean, there's a lot of stuff that we look at that, we're just going to reject out of hand because we know, we only invest in very narrow set of spaces, and we know those spaces really well. So we know what's going to work, what doesn't work, what's a priority for a buyer like a CISO or a CTO or a CIO, and what's not. And especially in this environment, as I said, who knows where the economy goes, but things are getting tighter, and you just don't want to be on the wrong side of the line when budget cuts are coming down. We're seeing that across the board: headcount reduction, pressures on margins. Inflation looks like it's going to be ticking up again. So what does that mean? It's going to be a tighter interest rate environment. So money is not going to be as free flowing. So you got to think about the macro picture too, and how competitive the world's about to get.
So why networking?
So it's really, okay, so...
cybersecurity, AI is so...
So when I started off in venture many decades ago, VCs made their money in 2 areas: semiconductors and networking. Everyone knew networking. And it's really funny today, I got a lot of grief for doing the Aviz deal. After we did the deal, I was at an AWS reInvent cocktail party, and there were so many people at that cocktail party that gave me grief about doing something boring like networking. And I was like, no, you don't understand. Networking is a space that people don't understand anymore. People just assume that bits magically show up when they're supposed to show up. And it's not that easy, right? I think Jensen Huang was talking about that, in terms of improvements on computing power versus networking. I think networking has a lot of room to run. It's an area that is not as well understood as it used to be. And I think especially now, when you're looking at the volumes of data and the computational intensity of GPUs and energy efficiency, by the way, I think networking is actually, a really key area. I mean, we're not only investing in networking, but that is an area near and dear to my heart from my days at Comcast Ventures. Cyber is the gift that keeps on giving. I think it's still a very fertile area. It is hyper competitive, and you've got these giant platform companies that are gobbling up a lot of the technologies, have really strong hold on enterprise customers. And so as a cybersecurity startup, it's really tough to kind of break in. Networking isn't easy either. You've got very large incumbent players. But I do think with networking, as you have these new AI factories coming on board, and by the way, every country wants to have their own sovereign cloud, And so NVIDIA has been doing a great job convincing everyone that's the right thing to do. And just the geopolitical environment is helping as well. Like, there's going to be a lot of networking that's required. And then people are talking about data centers in space. Like, think of the networking problem that's associated, that's associated with that. The other interesting thing is today, for the first time with Starlink and, Project Kuiper at Amazon, you have truly ubiquitous broadband coverage across the globe. That has not been the case before, right? So you cannot hide. Satellite, mobile, wired, you're always connected. You're always discoverable. That's all networking too.
All networking.
That's right.
Well, Louis, thank you very much for joining this podcast. I have
Thank you for having me. Okay.
I have one last question for you. Let's finish up on the fun note. Is there a book or a podcast or an episode or your favorite movie you would like to share that you think every founder should read?
All right. Since we've been talking about NVIDIA GTC, obviously Thinking Machines, Stephen Witt, you should read that.
That's a coincidence. I don't know, but I'm also reading this book right now. I'm very impressed. So
it's good. It's amazing. It tells you a lot about Jensen Huang and his personality. I also like to say, we are in this tech bubble here. And so one of the things that I did during COVID is I joined a history book club.
Oh.
All right. And which gets you outside of the tech bubble and gets you, first of all, interfacing with normal humans outside of Silicon Valley. And then also just talking about other things. I read a lot of history books. Most recent one was The British Are Coming, Rick Atkinson. That's really an excellent book. A very thin book, Walter Isaacson's The Greatest Sentence Ever Written, about the U.S. Constitution. The Declaration of Independence. I think it's also good to sort of be a well-rounded individual and sort of look beyond that.
Absolutely. Whoever understands the history can predict the future. So that's why you invested in Aviz.
One of the reasons, yeah.
Well, Louis,
Good.
Thank you very much, and it's been
Thanks
great having you. And we'd love to invite you again for the next episode.
All right. Okay, great. Thank you.